And the recording is started. You guys can stop me and ask questions as I go. This isn't me just blathering. This is me. Basically, Mike, I put this together Friday. Um, just a different way of looking at stuff, thinking that maybe this is a different thing that I've done before. Um, and the really objective here is to let people who don't have Thor's vision of value be able to derive it on their own, right? Because everybody goes, how does Thor know where value is going to be tested, not tested? So let me kick off here. So this is all about how to identify and trade value, which is value acceptance and rejection. I start off with this easy little statement. It's cute. That's Thor. The guy's very much a unicorn in that he sees things with his head and eyes, his brain and his eyes that I can't see without software helping me figure it out. He has a gift. And I've followed him since 2020. The guy is now targeting a 7-figure annual income. He's absolutely killing it. Okay, so this is basically the same thing. I met Thor back in 2020. Thor, within a year, Thor developed his methodology. This is a little bit about me. Mike, you know most of this in terms of what my background is, what I've done. Being a high net worth person now and being able to make sharp, clean decisions, I can be decisive and calm, which is what you need to be when you're trading. So let's get into the meat of this stuff. There's a little bit of setup, and then we'll go talk about charts. So how do us mere mortals, i.e. not Thor, not the god of thunder, how do we see what Thor sees? And I'm going to hope to show it to you. Some little refreshers. The market's always in search for value. That's the market auction theory. Balance, excess, imbalance, move to new value, set balance, yada, over and over and over and over. And then if we don't accept that, we move back to another place. And some subset settings of this is value is a range. Some people think we're underpriced. Some think we're overpriced. Then there's two types of traders. Initiative traders that take from price and try and push it away, either up or down, and then responsive traders that are basically taking price that's extended and drive it back to accepted value. Now, responsive traders tend to be, that trade is a higher likelihood of happening than initiative traders. And you have to understand that one person's initiative trade might be another time frame's responsive trader. So you got to understand there's multiple time frames happening, and what are you within what time frame, and where do you best perform. It's a lot like a baseball player. You know, like in the World Series, some guys love fastballs, some love some sliders, some like some off-speed pitches. But when you know you're suck at one kind of a pitch and you see it coming, part of your brain goes, if I swing at it, I will either strike or I will pop it up and cause an out. So the better thing to do is just let it pass you by. So there are times where the setup may not be exactly what you want, but in terms of your odds of performing at that setup might be quite low. The key of all of this is knowing where the accepted value of the prior days is, whether that's today, yesterday, or 2 or 3 or more days ago. It takes time in the seat and tracking value to begin to see acceptance and or rejection of prior value. Pivot theory does work both on the monthly pivots as well as the intraday pivots, and I'll show you a little bit more in a minute. This is part of presentation on value that I did before. I think I have it recorded. This is just a example of how Camarilla pivots are calculated. So basically, it looks at the low, the high, and the close, and mathematically says this is where we should trade. And the reason we're looking for a smart entry in and around S3, S4 is because that's where the low value was the prior day. So if you're patient and you wait for an S3, S4 long back above and extend beyond value from prior day, that's a patient, reasonable trade. Same thing goes in the opposite direction. When you first start trading, you have to learn how and why the market works and have a little bit of theory. Thor's book is based on pretty much these 6 books. So that's the knowledge, that's the education. Then you have to learn your tools. I don't care if it's Bookmap, Toss, Sierra, TradingView, Ninja. What is it? You need to know your tools inside and out. Then you can actually start to practice and find out what kind of trader you succeed on. Are you better responsive or initiative? In what time frame? And then you need to know what you're trading, what an average stop loss is safe. Okay, for me, NQ is $22 to $25 a stop loss. Thor's about the same. ES is $8 to $12 on average, if I'm seeing it right. Now, when you first start, you're probably going to be early on your trades. You need to know if you were right. Did you see the change coming? Were you just early? So did you see the change in order flow and the DOM? Now, that's different than the confirmation to enter. And that's where I struggled for so long. I would see the order flow and the DOM change at the right place. I would take an entrance, but I didn't have confirmation yet. Knowing that this exists, now you need to know where price will either accept or reject prior value. Subtext here, the market is ever changing. We have new players coming in, new players coming out. That's why nobody's 100% hitter. We are probably 50 to 70% if you're good. Also, I ask everybody, who stops the buying? Buyers stop buying when they exit. And it's only until they stop buying and you see exhaustion that we tend to see sellers come in and they take it down to where they stop selling. You can see when the buyers stop buying and when the sellers stop selling, and they allow the other side to come in. Additionally, stop hunting on a bigger time frame does exist, and you need to keep track of where those stops are and what will happen, what will it look like when stops are hunted. When I'm watching my trades, I'm actually watching the profile of individual candles. I'm going to give you an example of it. This is a 5-minute chart on NQ, and I want to show you something. I'm simply zooming in so that you can see this is the profile for each and every candle. So you can see we stopped selling for some reason. Then we came through, sold, but then we couldn't sell. It's slightly lower than we held, and now we're buying, okay? So you're looking, this is a 5-minute period, nice little pullback. You're also watching volume. If there's nothing definable that you can take action on, stop, don't take a trade. You need to watch for what's going on, right? Here's the bottom. Do you see it? Okay, we had it. We had stopping volume coming in, lower, nothing. Now this shows no buying to the top side, which is interesting on this candle. We had volume in here. We have one more little volume there, but then we go right back through and hold. The question would be for me, when do we get back above that guy right there? We come back down. That's Friday's low. You can make an entrance. So back to this guy. I'm watching multiple time frames, and I'll show it to you in a minute. I've got daily, 15-minute, 5-minute, and then it's either a footprint or a 30-second. And this is on a 50-inch monitor, so it's not so squashed. Right now it's being compressed because it's in 1/4 of the space it normally is. I'll show you my layout in a minute. So you need to know where the volume occurred on any given candle. Top, bottom, middle, where did it happen? Okay, so when you first start looking at my charts or start looking at charts that have a lot of things on it, you can see I don't have moving averages or anything else. It's a lot like looking at a space shuttle cockpit, massive overload. Okay, I don't care who you are. If you haven't trained for this, good friggin' luck. Okay, I fly those, and that's not nearly as complex what that is. Okay, I also didn't start driving these boats until I had time in smaller boats. It takes time to learn, and the way to do it is to break it into teeny little pieces. What happens when you go in too fast into a complex situation and you succeed initially, and then you basically bury the airplane or run something into a boat, and then you realize you were stupid, you didn't know enough. That's where you get in trouble. I did that in 2020. I realized I had to start learning. And by the time I got into 2022, 2023, I was starting to put in enough knowledge and understanding of the market so that by 2024, late 23 and 24, I got really friggin' good. So it took a little bit of time for me. Back to the charts. It's okay to be overloaded with this. I'm going to break this down into parts so it tells a story. Your job is to be a detective, find the clues that the market is giving you so you know what this is saying. When you're going live, you need to have the knowledge. You need to know your tools. You need to understand all the theory, but it doesn't mean you're going to be ready yet to perform positively at a high performing level. Okay? Part of this comes into psychology of overcoming fear, greed, and outside factors. This is a Dr. V thing if you can't get over it. Are you being able to trade in absolute calm/serenity? Thor and I are finally there. Physiology. Do you wake up in the morning? Are you ready to go? If you're not, or there's some kind of stress, sit the day out. If you get angry, go away. Are you following your rules? Okay. Most traders start focusing really early on not losing money because they have a small account. They don't want to lose it. They're not focusing on winning. They're only fear-based. Okay. At some point, that will fix itself, but you kind of have to work on it. Here's how we start looking at the bigger time frame and what the market is saying it's accepting and not accepting. Every day is broken into 4 parts. USRTH, which is this purple part over here, then USA settlement. Ignore this sucker. It's just the settlement of what happened today. Don't get caught up in that. Then you have the Asia markets and the European markets. Each one of these things means something. But if you're going to trade the RTH, then you need to watch and understand where RTH was accepted and rejected on prior days. I'm going to try and show you how to do that. You also need to track where the stops are and make notes of what you think. If we open up here and we get outside of those stops, can we just push back up to the top because these guys came in too late? Okay, we're looking for that. So make sure you're tracking and making notes. What you're seeing right now on this chart is a TPO chart. It starts like right here with the purple, settlement, Asia, EMEA, and then we go into it again. So this is all Asia, that's EMEA, and this begins RTH again. I can see where my time-based value is, that's the purple, and I can see my volume-based, which is this guy right there. I'll show you, I can turn that on and turn that off, and then you see my cams. Again, this is my volume-based profile. There's the POC. There's value high and value low. Time-based, value high is the same. Value low is a little higher. You need to be aware. When we do a trade up here and then a trade down here, the likelihood is we're going to trade in the middle. It's a lot like the Goldilocks. Too hot, too cold, just right. Or too high, too low, just right. Then you don't know if you're going back up to test or doing, and that's a dangerous place to be. Back to my charts, I have ES daily, 15, 5, and then a 30-second or a footprint, and I have a TPO chart that sits off to another monitor to my right, and an NQ PTO as well. And then my NQ timelines are here, and then I run Discord or music or something else on the other monitor. I have lots of real estate. So now what we're going to do is we're going to start with chart review so you can find out where value is. We're going to add the volume and then figure out what does the market say for each days. Then we're going to forecast the cams for the next day so that you have some idea of what you're looking for. Then I'm going to bring up the TOS and show you, you can track a lot of this with TOS, but I would recommend Ninja, what's the one? TradingView, and then or Sierra chart, minus Sierra chart. They all have basically the same things. Okay, so when I'm trading, remember on one monitor, I have my two TPO charts, NQ and ES, and you can see they're behaving very similar right now. The purples and what I'm looking at right now is just RTH, and is settlement in here? Is settlements in there? Okay. My ETH is not even in here. Just not. So that's RTH, that's settlement. RTH, settlement. RTH, settlement. Back in here. When we are playing with bigger time frames, and I should probably make this full size and show you, there's some interesting behaviors over time that replicate themselves over and over and over. Okay? So when you look at a, where is it? Rectangle, there it is. We had value there. So we moved up to the top, down. The thing that I want you to be aware of is, and this happens, you'll see it, anytime you have a value area when we break out or when we test from top to bottom, hold, top, retest mid, and go, we will break that. And it is stunning how many times you can take that amplitude simply stack it on top of that one, and that's the target. I guess the bigger traders know that. They're just going to go up and just double the amplitude of before. Now we're in a small range right now. We haven't accepted yet, but we know we have a range right here, right now. It's all we know. I can show you something I did inside of it, which makes sense. What'll happen is if we go back to the top, come back to the middle and break out, or are we coming out, coming back to the middle and breaking down? I will show you what I did on these days, but what I'm going to do right now is get rid of those so they are not happening. What do I think happened there, there, and there? And would I have traded or made that trade? Nope and nope. Maybe on this day. And there's reasons why I would and would not do it. When you gap out of all value, there's a 50% chance that we're coming back to value, and there's a 50% chance that we're going up. It is a 50-50. We are in no man's land. I suggest you take your hands off the wheel. Don't even, I mean, you are above R4 and it went to R6. All right, maybe. I don't like it. I don't like it at all. And then you had this teeny little on the 22nd, right? That was Sunday. We had a little bit of stuff coming in, I think. And why are we missing dates in here? 324. No, there it is. 23, 24, 27. Yeah, weekend in here. It wasn't showing up. Okay, so how do you trade above R6? If that's even R6. I don't think that is. That's just value low. R6 is somewhere up in here. That's nuts. I don't know how to do anything that high up and out. What I'm waiting for, and I'm going to take these little circles out over here because those are setting up for the next day. When we go up, and then we got Jerome Powell's news right there. My belief was that we simply squeezed this here, 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 so that the market would be in a place to sell. So this light volume, squeeze volume, just enough to keep it going, because you don't have anybody resisting you at this point, to a point where when you had Jerome Powell's news, you were ready to either go or play all the way back to value. And we're very extended. If you look at the daily time frame, and I need to bring that over, that's what we've been doing. That's ES. NQ does not look that differently. We've been, since May, just screaming up. A little pullback there, one day there, nothing significant. Oops, wrong thing. So, like here's the ES. If I'm trading this, I want you to see if you can see what I see. We set value and then we set higher value. Okay. This value, right there, we closed like in the middle of that candle. That's not strength. This is strength. Each of these pieces of purple are 30-minute segments from A to M. And the initial balance is this white line, the first two 30-minute segments. What is going to be obvious is we covered POC, but we sold off nicely. The end of the day, we came back to it, but look where we ended the day, down here, outside of value. So you had value, sold. We tried to get up here, could never get there. I actually entered in the middle of the night in ETH when we lost that level, because we had shitty sustain above that level. So when ETH went up there and it came crashing back down, that I'm going to put it in purple right there so you can see it. And if I turn on my extended hours, do you see where we went up, right? It's that way, yep, right there. So before we opened in earlier pre-market, we started losing it. And I think I went in right there. This actually, this X and that W should be part of this, part of pre-market, not US. So US begins with A. My timing is off. Sorry, guys. I made a mistake. Let me do something really quick. It's this guy right there. This should be 1900. And this should be 929. Okay. Z fixed. Done. Yep. That's where I went in. So when we lost it there and came back out of EMEA markets, paying attention. I don't know why I was up. I was. So each day will tell you we tried trading here, we tried trading lower, couldn't, went back up, failed at exactly the same level. Failed again at exactly the same level. Right? And we entered down. That was on the 31st. That was Friday. Now people are going to think that push back up to the top, but then sell with strength. It's not. We completely sold out and we ended here on Thursday. We ended there Friday, and value traded lower. Volume value was from that line to that line. So we're slightly shifted down on volume, but time and value is lower. We did get good buying off of, and you can see it right there, value low from before. We came down, tested it, right back up. Have we closed this gap completely? No. Do I think we will? Yeah. So what I need you to do each day is say, what did this day tell you? We opened, right? We transitioned to B. This is B to C. I'm trying to figure out where A is. The light blue is where we begin. I'm not seeing it in here. I have to find out where we opened on this first 30-minute segment. from A to B. So we crossed over there, but I don't know where we opened. Then B ended here, C went there, C went up. But this is where on a 30-minute, you're starting to say, okay, we don't have any interest of going higher. We did have a nice hold. As soon as we completely engulf that guy, it's not good for the day. If you can see the 30-minute, that next one here to D, then to E, engulf on C and D. Once you have that, things get very sketchy that we're going to be able to go back up. Again, when you're looking at ETH in with RTH, it gets very difficult for people to understand what the market's doing if you're allowing all of this to mess with your brain. But did you see Asia went all the way up, all the way down? Finished basically where we ended the prior day. So this market is saying it agrees we don't belong up there. This market ended down here. So that's where we were opening right here. We went back up to see if we belonged in value from the prior day. That was it. So if I'm drawing a line, that was value from the prior day. We couldn't get back into it. We're going to trade lower. That's value trading. It's all it is. Where we went up. Now this is Powell. This is the next day. And all we did was trade south. What's the next day? Okay. We can't even get back to that. What's interesting is you can actually say we couldn't get back into this one now, and this is what's bizarro to me on how it works. That's the next one. That's the next value down, right? Not able to get there. And if you're seeing that, we know we don't belong up there. Probably going to rotate down. Once you have the understanding of what the market's telling you each day, are we ending outside at the top of value? So I got to go back here real, Mike, this is a really important piece. It's this day right here. So you can see where value is set. There to there. We didn't accept new value yet. That's a sign of struggle. We ended back in value, not accepting anything above that number. I'll put that there. I'm going to change it to red dashed. So you see we blew right through it. We come back up. We try and get above it. That settlement, that doesn't matter. Can't get back there. We're rotating down now. Now the question is, how do we play tomorrow? Right? Because that's all we're trying to figure out. What did we do with tomorrow? What we know is where value has traded and where we have not gotten any acceptance. So we haven't been here. That's the lowest value that we have accepted. And we're there. That's where we closed. If you need to draw the rectangle, draw the rectangle. I don't think this was early value. I'm going to draw it to there. So from that red line to this one, that's value for me right now. In the middle of that, we don't know if we're going to retest here again, right there, which is R4. Are we literally going to test R3? What you need to be aware of is there are stops there and there are stops there. And if they get those, the only other people to stop you are up there. Now, if we get close to this and we can get through and above R4, right? We could go up here just to stop them out and get a little push up and then roll. It's possible. But these are Monday's pivots. And what you could do is say, if we open up in value between S3 and R3, which is where we had value the prior day. So anywhere between those two numbers, if we open there, what's likely? What do you think? We could immediately fall, right? Possible. We could go up and test between R3 and R4 and see if we can get back up to the sellers that want to be up here. I could give you both of those cases. So on the open, if we opened here, I could give you a 50-50 that we do that or then that. If we open in the middle. Now let's look at what happens if we change where the open is. If we open above R4, what happens? These people are trapped. When we say we open above R4, normally that's where resistance was. Okay? So what will happen is that these traders will first and foremost try to get back into price, into value of the prior 2 days. They're going to try. If they cannot, these two people are trapped, they will exit, which means they have to cover, and we will get a purchase by them as they cover out. Until you are here and get proven that they can't get back to R4 and stay above that value, then you could play it out. But they will try and get back towards value if they open outside of value. The same thing normally happens when you open out below value. The people who were going along here and here are now finding themselves trapped. They're going to try and get back into value, which is right there. If they can't, we'll sell off. These guys, once they get back into value, now we're going to see who wins the value argument that was set the prior day. Can we get all the way back up just above R3 where value was? Are we going to stall there? I don't know. I'll know it when I see it. That's the key. That's why Thor and I are always like, we know it when we see it, but we know where value was accepted. It was not accepted up here. 2 days of just say no to 69, call it 69.10. Not going to happen. Doesn't mean they've stopped trying, or if there's another piece of news. But that's how the market's going to play right now. Where we open determines whether or not we can squeeze these guys out of their position, make them cover, or make these guys cover in the opposite direction, or do we allow them to come back? Now, think of yourself as a buyer. Where do you want to buy? Well, we've shown that value's here, but it's slightly descending. A responsive trader on this time frame is trading back into value, middle here somewhere, right? CP maybe, BDC right about in there, and then maybe fail that. That is not a perfect Camarilla pivot play. Sellers, where do sellers want to be? They honestly want to be, they want to sell up here. They want to sell as high as they can. So they won't get involved until the buyers stop buying. If you get buyers coming in who just can't help themselves, because that's what's going to happen, they're going to try and bring it all the way back up here, and the sellers are just going to wait. So you have to see what the initial balance is. You have to see how do we react from there. We know where acceptance is. We know where rejection is. Now we see what tomorrow brings in terms of acceptance and rejection. And that, my friends, is how you have to trade on value. Why does it matter? So tomorrow, if you think we're a short, somewhere around R3 makes sense, because we have lowering higher value, lowering high value. So the next one ought to be in here somewhere if we're on a trajectory down. If we get back above that and squeeze those guys out, could happen. We'll see. I got to see where we open. What is the market saying? And are we open yet? We should be open. Yeah, Asia should be hot. I'm not seeing it yet. Is that 4 o'clock? We should be coming live here real soon. I'm looking at my other time frame stuff. See if I see it. No. Oh. It comes live in how many minutes? 13 minutes. Then we'll start to see where Asia speaks up.